Today I want to talk about my top avenues that I'm going to explore before telling someone that I can't get them an approval. Unfortunately, in my experience as both a loan officer and a home buyer, I've seen a lot of loan officers out there that will kind of just search for the low-hanging fruit. If someone's not easily qualifiable right away, they just say, nope, the loan's denied and walk away. That is not how I operate, and I want to go over some of the things that your lender should be talking about before they tell you we can't do your loan. Hi there, I'm Zach Shaphorst, licensed loan officer with the Shaphorst team, powered by Houston Mortgage Brokers. Welcome to my channel, where I'll try to demystify all things mortgage related. If you find this content helpful, please like and subscribe. So in general, there are three reasons for someone not being able to get an approval: credit, debt to income, and assets. So the most basic thing that any lender should ask for if someone is not able to get an approval initially is, do you have a cosigner? Outside of credit, a cosigner can move the needle the most in terms of both debt to income and assets. So the way it works is, with a cosigner, the two borrowers we will combine the income, combine the assets, combine the debts, and we'll take the lower of the credit score. So if your debt to income ratio is too high, you just want a cosigner that has really good income and relatively little debt with a good enough credit score for that program. If you need assets and your debt to income ratio is high, then you want a cosigner who has high assets, high income, low debt, and is able to qualify based on credit as well. Now, let's say you can't get a cosigner, but someone that you know, like a family member, is willing to give you money for a down payment. That is an option. For if you check all the boxes except for assets, you can have a gift from a family member for pretty much any loan type, and that'll take care of your issue with assets. The last thing that I would explore if someone is good on credit, good on debt to income, but short on assets, is down payment assistance programs. Now, I've said this in other videos, not all down payment assistance programs are favorable to the borrower, but I will at least lay out all the options so that you know what you can do. Now, next category, let's talk about if debt to income is the issue. So first of all, I'm going to look at what your debts look like and if there's anything that's easy to pay off. Let's say you have a credit card that you only have a balance of $1,000, but it's counting $500 towards your debts. That would be something that would move the needle quite a bit. Another thing is exploring all the rate options. Maybe you don't quite qualify based on the market interest rate, but we can work the numbers to get the rate a little bit lower with paying points or getting seller credit, something like that. And we can make the numbers work based on that. And then the last one for debt to income is looking for other sources of income. Maybe we're qualifying you just based on your base salary, but you also get paid bonuses or commissions, or maybe you have a side hustle. Generally, anything outside your base pay, we will need to see a 2-year track record of. So that's the only limiting part of that, but it's something to look into, because if we can, then maybe that slight bump in income is able to put you within the debt to income range. And then last, and probably the toughest to work around quickly, is credit. So with credit, it's pretty cut or dry. You either qualify for the programs available or not. Now, a good loan officer should be able to tell you if there's like one thing that's holding you back. A good loan officer should definitely know what the credit thresholds are. So if the threshold is 580 and you're at 579, then you're not too far off. And if there's an item that is clearly holding you down, a good loan officer should be able to give you some guidance for how to improve it. It's probably not going to be an immediate fix, but it should be able to bump you up pretty quickly. Now, let's say your credit is completely out of range in the 400s. every loan officer should be able to at least point you in the direction of a reputable credit repair company that can really dive in and create a really in-depth plan for how to build your credit up to the range where you can buy a home. As always, if you have any questions, shoot a comment below or feel free to call, text, or email me. But thanks for tuning in to this video, and I will see you next time.